So hi everyone, welcome to our webinar. We're all here today because of the great news that SEBI released about a week and a half ago on the SM REIT. They finally put out the notification. So just before that, we regularly have these webinars, whether it's to do with regulation, whether it's to do with SM REITs, fractional ownership, or whether it's to do with broader markets, because we just want to keep engaging. We enjoy doing this. We enjoy being here and sharing knowledge with everyone. Um, and that's where we are. I think we have one asset live right now. We're pretty much filling fast. We're over 75% funded over there. It's in Bangalore, so that's going well. Um, recommend everyone who's interested to obviously reach out to their RM with regards to that asset. So I think, to start on the SM REITs, I think this is a monumental moment for the real estate industry. This is what we've been working towards for the last several years. And now finally we have semi-regulation. Obviously, we knew it was coming over the last year and a half. In fact, and if you can move on to the next slide, to talk a little bit about the process of this regulation, or rather before that, let me just talk about what this means for real estate as an industry. I think real estate traditionally has always been a little bit opaque, a little bit restricted to a few handful of developers, and there's always been a lot of information asymmetry between investors, customers, and the seller of the asset. And I think our mission when we started this business was to bring trust and transparency to the real estate sector. And I think this is just the first step, to be honest. Obviously, we started about 5 years ago, and finally we have SEBI regulating this industry, which is extremely positive in bringing trust and transparency to the industry. But this is just the first step to really bring financialization of real estate. And I think it helps each and every stakeholder in the industry, whether it's customers, whether it's investors, whether it's developers, whether it's sellers of assets, or whether it's all the intermediaries that are in the middle. So this is a monumental step for the industry. To talk a little bit more about what's happened so far, for people who haven't been tracking the space yet and who just joined us for the first time, who want to learn a little bit more. So in fact, SEBI took initial interest at the end of 2022, where they saw fractional ownership as an industry growing. And they took our views, we interacted with SEBI. And then in May, they put out a draft consultation paper as to what the framework would or should look like, and invited response from the public. And so I'd really like to credit SEBI over here in the fact that, they've taken a very collaborative approach with the industry. I think they're looking at this in a very positive light, and we can see that in the way that they've gone about it. So in May, they put out a draft consultation paper for which 70 plus responses were received from the public. And then in November, after the last SEBI board meeting, Mrs. Madhvi Puri Bush in her speech announced that we're going ahead with fractional ownership. We're calling it SM REITs. And then finally, on 8th March, about a couple of weeks ago or 10 days ago, the detailed notification came out. So obviously we knew it was coming, but the exact shape or form, the detailed write-up as to how it's going to look, what it's going to look like, we didn't know until 8th March. So we're extremely, overjoyed about this. I think it's going to just bring tremendous transparency to the industry. So let's dive into it. Next slide, please. So although we weren't sure what the final detailed notification would look like, I think we're pretty clear. I had a webinar about a couple of months ago. At least we knew what the SEBI board the agenda for the board meeting is, or what the proposed regulation would be. And to be honest, not too much has changed. No surprises, and I think that's a good thing when we have something good and it's working, and there's not too many surprises. I think that's a very good thing. There's only one caveat, which I'll touch upon later on, but I think that's overall positive. And only one caveat is, earlier we thought no leverage would be allowed and no debt in any SPV. And now you do have the ability to take on debt, obviously with certain conditions. So that's one positive. It just offers more flexibility for various assets that we do pick up. But obviously, for people who are joining us for the first time, for them who it's a primer on this regulation, um, basically, what is the regulation? At starting point, the regulation allows us to bring, rented out assets to investors to invest in on a fractional basis. Because generally these assets cost, tens or hundreds of crores. But most investors don't have access to this asset class because of the ticket size, among other things. And with this, retail investors can own this asset class. For people who are joining us for the first time, I can also see, a lot of investors who've been investing with us for the last 5, 7 assets that we've listed. So for them, this might be a repetition, but I think we're seeing a lot more investors. So this is basically allowing investors to own rented out assets with a much smaller ticket size. So, what does it look like? Basically, this is a trust structure. So it's going to be listed, and I'll talk about the structure in a little bit, but it's going to be a listed listed entity where investors do invest. So the ease of transaction will also increase further. But just high level, in terms of assets that we can list on the platform, it's anywhere between 50 to 500 crore, which is just about the right sweet spot. Above 500 crore, SEBI has reserved that for the traditional REIT model. So we look at assets between 50 to 500 crore. The minimum investment size for an investor is 10 lakh, which is extremely affordable for real estate. And in fact, from what I've gathered from listening to the SEBI chairperson, I think once there's trust built in the industry, that 10 lakh will come down even further. Every scheme, which means every asset, requires a minimum of 200 investors. And given that it's listed, it's open to not only NRIs, but now also foreign investors. The taxation will now be more similar to listed equity. So it's 10% for long-term capital gains and 15% for short-term capital gains. Next slide, please. So obviously there are certain requirements for the investment manager being us, hBits. And I think this is extremely positive because it ensures that, there are only credible people who are acting as a fraction ownership platform or the investment manager of the SM REIT and who are bringing assets to your table. So the two major points are for anyone who wants to be an investment manager, who wants to run an SM REIT, they require a minimum net worth of 20 crore, of which 10 crore should be liquid net worth, which means it has to be kept, either in bonds or government securities or FTs. And I think, that shows that the investment manager has some strength, some credibility. And other is the experience, either 2 years of experience in this business, or 2 key personnel must have at least 5 years of experience. I mean, for us, I think that's easy. We have, over 30, 35 plus years of experience and parentage in commercial real estate. Next slide, please. The other thing that SEBI is mandating is skin in the game. So us as an investment manager has to invest in each and every property. If there's no leverage, we have to start with a 5% investment that comes down over the years, as we can see on the slide. And if there is leverage, if there is debt on the property, then we have to invest 15%. And I think that makes sense because leverage means a slightly higher risk. And so they want a higher skin in the game from the investment manager. Next slide, please. So what kind of assets can be invested in? Under construction is not permitted. As of today, the hope is that as trust is built in the industry, this will be relaxed. But as of today, under construction is not permitted. At least 95% of what we've raised per scheme has to be invested in complete and rent generating asset. The balance 5% is in unencumbered liquid assets. I mean, what that means is practically that, your security deposit, etc., or your reserves of the SPV will be kept in FD. And the rest of it has to be in rent generating asset. 95% of the net distributable cash flow, which means whatever rent we generate post expense, has to be distributed to the investors. And we have to distribute it at least once every quarter. As of today, we do it monthly. I think we will aspire to do the same, but there's flexibility for certain managers to do it only once every quarter. And everything that the SPV generates has to be distributed to investors. So the SPV can't really keep the funds, can't really invest it anywhere else. We have to distribute it to investors. So, the flow of funds, what the use of funds will be, both incoming and outgoing, from the SPV is extremely transparent in terms of what you can do and what you cannot do. For us, that's business as usual. That's how we've been operating anyways. So not much changes from us. I think this just ensures us customers and investors that the industry is secure. We've been doing it anyway, so it's business as usual for us. Next slide, please. We require a valuation report from a certified valuer on a yearly basis, or if there's any material development in the asset. And again, we've been doing this as well. Every year we get a valuation report from a third-party valuer. And I think what this will help though is that given now that it's listed, the ease of secondary transactions, not like we weren't having secondary transactions anyways. Even as of today, if an investor wants to exit, we're able to give an investor an exit within 30 to 45 days. But I think liquidity in this industry, both because of awareness, because of regulation, as well as because of the listing, is just going to increase. It's just going to keep increasing. And so the secondary transactions will just become quicker and quicker. Next slide, please. So in terms of the structure, what does it look like? This looks complicated, but it's not. It's extremely simple. Basically, there's the trust. The trust is the SM REIT, and there are specific schemes of the trust which have SPVs and assets under them. And investors can pick and choose which scheme or which trust, which scheme or which asset they want to invest in, and they'll own units in DMAT. So it's very simple. It's like owning a share in a listed company, and you can pick and choose as an investor which asset you're investing in. So it's pretty much the same as to a listed entity. The only difference is that you have the ability to pick and choose which asset or which scheme you're investing in. Next slide, please. So in terms of, there were questions on migration of existing investments. So we're getting clarity as to whether it's compulsory or not to migrate, or whether it's an option. But regardless, we'll be looking to migrate because I think this benefits investors. Again, you're moving to a structure that's not only more tax efficient, but that's also more listed. More liquid because of the listing. So we have 6 months from date of the notification, which is March 8th, to apply, and then 6 months from our certificate to migrate. So while we do have 6 months, like I mentioned before, we want to be the first. So we're moving very rapidly here at hBits to make sure that that's done. There might be questions on, your prior assets. Some of them, which they are, some of them are smaller than 50 crore, especially the assets we did in the early days about 2-3 years ago. Some of them might have less than 200 investors. In fact, a lot of them do. But as per the notification, there's an exception for that. For migration for already existing investments, we have that exception. So not to worry in that case. Next slide, please. So obviously these are high level for every asset and scheme. We'll have to have a certain amount paid to SEBI. And in terms of our fee structure, it's still evolving. It won't change too much from what it currently is. Next slide, please. So obviously, investors will have voting rights on a pro rata basis, the same way one has in a public company or in a private company. You're voting as per what you invested. We have a dashboard where we'll be sharing the audited reports, the valuation reports, the financials. Investors have rights to change auditor, valuer, trustee fees. And for that, we'll have, annual meetings, or we can call meetings if we feel it's necessary, which is, again, similar to the way we do it today. The only added advantage is an investor grievance portal, which is provided by SEBI for any investor grievances. I don't think this will be used too much. It's always an option, but we've never had any issues with any of our investors. And I think that's because we do everything. We're a very conservative platform. We check all our boxes, we dot all our I's, we cross all our T's. And so I think we have a lot of investor satisfaction. Next slide, please. So I think the main thing is that you can have, the IM and sponsor is one, so that, the cost for investors doesn't really change. The issue period will not be more than 30 days. So, the assets will be generally funded within 30 days, which is what we see anyways. The SM REIT, and I think this is the third point, is that we cannot offer any incentives to investors. This is the same for anything. It's there in normal public listings. It's there in issue of non-convertible debt and securities. It's a very standard thing by SEBI. And a scheme can have multiple SPVs. Next slide, please. So yeah, I just want to end this presentation. It's been short. I want to save more time for Q&A. I already see a bunch of questions. So just to end the presentation, I think we've seen the real estate, residential real estate as an investment, the size 80 lakh crore. For mutual funds, it's about 50 lakh crore. FDs is about 100 lakh crore. I mean, it's just the starting point for commercial real estate. It's only 4,000 crore today. And I think, this is kind of the mutual fund moment of the real estate industry. We're just going to see it explode over the next 2, 3, 4 years. So I'll end with that, and I'll just get into Q&A. Thank you. Great. So I'll start off. Question from Tokir. A bunch of questions from Tokir. When will SM REIT be listed? I think we want to be the first. The existing investment will also be converted. I did answer that question. Whether rental yield will reduce due to compliance costs and other expenses. No, I don't believe so. Because all the costs are pretty much the same. Not too much has changed on the cost structure. Rental will be paid monthly or quarterly. We have the option of doing quarterly, but I think investors like monthly, so we'll mostly keep doing it monthly. One unit will be 10 lakh. What will happen to those who have existing investments not in multiple of 10, like 25 lakh? So for existing investment, there won't be any issue. For new investments, the lot size is 10 lakh. Yes, it'll be traded in the market with one lot size of 10. Question from Umar: what is the expected timeline for these REITs to be launched in the market? I think we covered that, and we want to be the first. We have 6 months to apply, but I think we're looking to be much quicker than that. Question from Satish: how are the monthly rentals distributed in the new SM REIT structure as dividends? No, I think it'll still be as interest. We're getting 100% clarification on this, but as per our understanding now, the trust is still a pass-through entity, so the rentals are still distributed as interest on. For investment sizes lower than 50 CR, they are not permitted in the SM REIT structure. In the current structure, yes, there's nothing said about that, but in SM REIT, they're not permitted. Venkatesh, there's a question on tax on rental income. So basically, it's the interest income, like I mentioned. Question from Sanjeev: holding duration for short and long term. See, it's up to the investor. Although I think to get really good capital appreciation in real estate, because underlying asset obviously is real estate, one should stay for a long term. When we say long term, we mean at least 4 to 5 years, because that helps your rental escalations to kick in. And that's when you really get the benefits of capital appreciation or any new infra development that's happening in that micro market. After that is when you get the benefits of capital appreciation. There's a question from Praful: what is hBits share in existing assets? If not meeting the new norm, what's the plan of action? So Praful, in existing assets, we don't have a share, and it's not mandated by SEBI, even from the migration perspective. But in new assets, we'll start having this 5% holding. I'd like to say that for all our existing assets, if you look at the performance, whether the ones that we've exited, or the ones that we're still in, if you look at comparative transactions that have happened in the micro market, where pretty above the target IRR we've projected. So I think all our assets are doing well, and I think that has to do with how conservative we've been in our asset selection. Satish has a question on the fees. Will there be any changes to the fee structure? As of now, no, there's not going to be any changes to the fee structure. So again, question on exit. We've exited at 17.5% IRR. And then, another property we listed at 11,600 rupees per square feet. Transactions happen at 16,000 rupees per square feet in the same building about a couple of years after. So all our properties are doing pretty well. Why does it need to be a trust and not a private limited? So the trust is the structure at the top, which is listed, and investors get units in the trust. And then the different schemes of the trust will own the various private limited, and the trust becomes a pass-through entity. This is how the REITs are structured, and this SM REIT is in effect, it's in an amendment or an addition to the current REIT regulation. Can a scheme have multiple assets adding up to more than 50 crore, or does each asset have to be that much? That's a good question. We don't have clarity on this yet. Whether we can have multiple assets under one scheme. However, our intent anyways is to do assets that are above 50 crore. So it's not something that we'll focus on too much. How does hBits makes profit? I think we charge fees on a yearly basis for property management. We also charge a fee, performance fee based on how the asset performs. Question from Aman: is it possible to share this slide? This webinar is going to be up on YouTube shortly after. So you can just access it on YouTube. So a few questions are a repetition on the lot size. Will the cost of fractional investment go up with the SM REIT? No, we don't expect the cost to go up. In fact, we are becoming more and more streamlined as we scale. So I think our cost structure overall as hBits is coming down. Question from Parag Bhai. Thanks, Shiv. Can you please highlight how it will be more tax efficient compared to ongoing FOP? So basically, you're on listing now, instead of 20% long-term capital gains, you have 10% long-term capital gains. So that's where the tax benefit is. What do you mean by taking on an asset that has debt? I think that's a good question because it's something new. And initially, we'll still be looking to do assets without debt. But just to explain what that means is that say my asset is 100 crore asset. I'm able to say raise 35 crore from a bank. And then all the other investors will come in and put in 60 crore. hBits will put in 5 crore. So whatever rent comes first will use to pay the 35 crore loan, or whatever interest is on that loan. It's effectively like, you can consider it like, for example, if you had a mortgage on that asset, it's paying out that mortgage back. And then whatever returns come to the investor, that will come after paying the bank back. It's basically taking a loan from a bank. What that does to the investor, because you generally get for these kind of properties, you get loans at 8-9 odd percent. So generally what will happen is whatever rent is coming in will generally pay out the loan, but then the appreciation of that property will be much higher. So the leverage will allow us to have a much higher IRR than we do today. A question from Ramnath on the slide on the structure of the trust. So Ramnath, just to clarify, basically there's a trust that's going to be listed. You as an investor can own, say, Unit A in the trust. Unit A will represent ownership in property A. If you own Unit B, it'll be under, it'll be through the same trust, but it'll be Unit B of the trust, and you'll own property B. And the trust is listed. So, all the units will lie in DMAT. Dhruvesh, how do you plan to manage the hedge against the dollar for foreign investments? That's something we'll have to explore, although now I think we don't expect the rupee to depreciate to the level that it has in the past. That's something we'll have to explore. But I think we're seeing a lot of foreign investors, and I speak to my co-founder, Samir. He's obviously based in Singapore, so he has a pulse on the global market. I think there are a lot of people who want India exposure, and they don't even mind taking rupee exposure. SM REIT means, question from Nikunj. SM REIT is small and medium REIT. Question from, will each asset be listed separately? Absolutely. Each asset is listed separately. Use the same benefits you get in fractional ownership, where you can pick and choose which asset you want. You get that benefit. Satish, does that mean the channel partner system will be eliminated? Absolutely not. I think it's just going to grow in the way the mutual fund industry has grown. And it's taken, absolutely not. It does not mean that. In fact, I think it's going to be quite the opposite. And we do need support of advisors and partners to scale this industry. Question on existing deals, which I have answered. Will this increase supply in the market bring down rentals? I think that's a very good question. If you're looking at long term, what's going to happen to commercial and office real estate? See, what it will do is it'll give developers, because if you look at the REITs, the traditional REITs, of which only 3 are office REITs, only 3 or 4 developers have access to the traditional REIT market. So what this will do, this will give all the developers, developer number, say 5 or 6 in the country to developer number 50 in the country, it'll give them good exit options for their properties. So they'll obviously be able to develop new office real estate. So while I do think supply will increase, I don't think it'll bring down rentals. Because I mean, just high level, you look at the way the country is growing, you look at our GDP, which is the highest GDP growth, which is the highest in the world. And then you look at the amount of office that India has compared to, I mean, whether it's US or, I mean, I think India has as much real estate as New York, office real estate. So I think the demand for real estate and office real estate in India is just growing. In fact, post-COVID, a lot more companies have started outsourcing to India. So I do think supply will increase, but I don't think that will bring down rentals. I think it'll have quite the opposite effect. I think what you'll see is, a lot more people moving from grade B, grade C offices to grade A offices, because you have more options. A question from Umar: for investors who adhere to Sharia compliant investing, can there be an option to not receive returns from FD? So we do that, Umar. As of today, we do have Sharia compliant investing, and going forward, we will look to structure that as well. Question from Arun on the Arun Kumar, depository provider for Demat account, CDSL and NSDL. We're talking to both, and we have to still finalize that. Whether warehousing question can be part of SM REIT, question from Parikshit. Absolutely. Any real estate asset that's constructed and rented out. Can a company invest in SM REIT rather than as individual? Absolutely. Absolutely. A company, LLP, HUF, partnership can all invest in the SM REIT. Will the ticket size for your current offering be reduced to 10 lakh? Arindam, we do have a scheme for that going on, so I recommend you reach out to your RM. So few of the questions are repeated on taxation, so just skipping those. Question: would you prefer to go for long-term lease or short-term? And what would be the impact on yields based on lease term? I think this is a great question. And why it's a great question is because there's no answer. There's no right answer. That depends on the situation. You want a long-term lease and a long-term lock-in when the rent is above market. So if the market rent is 100, if you look at all the other buildings in the property and it's 100, and your rent is at 120, then you want that for as long as possible. But if your rent, because then you don't want your tenant to leave and go somewhere else. But if your rent is lower than market, if it's say 80, and your market rent is 100, then you want a short-term lease, because then you can renegotiate with the tenant, saying that, now the market rent is 100, so let's take this 80 up to 100. So I think that depends on the situation by situation and micro market by micro market. Is there any commitment if investor wants to exit? Generally we've been able to exit to our investors, to other buyers in 30 to 45 days. Question from Kunal: minimum maximum fund life of a scheme. Generally, we look at 4 to 7 years for our investment horizon. A question on timeline, which I answered. Will the existing investors who invest in previous projects, if we look to migrate, we will have to open Demat accounts? Yes. Question from Praful: as NAV is calculated only once per year, but it will be traded on exchange, then how would price be decided on a daily basis? Based on demand and supply. Praful, I think you answered your question. Yes, it is based on demand and supply. For all properties, will the price appreciation be disclosed? Yes, we'll be disclosing the valuation report that we are doing. Yes. Arun Kumar: are there public disclosures a trust has to submit to SEBI on a quarterly basis like mutual funds do? Yes, we will have to do that. Questions on taxation, have discussed that. Debt, have discussed that. Was the impact of trustee fees and listing fees in SM REITs? Those fees are there. They are small, and anyways, we kind of incorporate that. We incorporate for that in our admin expense anyways, because a lot of other fees will reduce, so it'll balance out. Do you have bank guarantee for return? We have a leave and license agreement with tenants, and these tenants are extremely creditworthy tenants. So for example, our Bangalore asset has Toyota as the tenant. So Toyota is not going to default. We have ICICI Bank as a tenant. I think the reputational risk of default is extremely high. So I think there's questions on NAV, which I've discussed. How much can I expect property appreciation per year? At a base case, you can expect 5 to 6%, and the upside can be even higher. Each property is owned by hBits. Each property is owned by investors. Initially they'll be owned by a developer or the investor, and they sell it to the investors, and these assets are already rented out. Will there be transparency if an asset has debt or not before investing? Question from Tasneem: absolutely. Maximum possible leverage is 50%, 49%, Kunal. Not 50%. Leverage is on the entity trust, which means equity the unit shareholders goes down, and hence IRA. Exactly. The leverage will be scheme by scheme or asset by asset. if one person is a Canadian citizen, once it moves to the SM REIT, they will be able to invest. Do we insure properties to protect from natural calamities? We do. We insure all our properties. Since units are listed, how can one sell their units? One can come on. It's like listing on a stock market. So one can, we'll have tie-ups with all the stock brokers, and one will be able to sell on the platform, and we'll be able to find a buyer for you as well. Can we get option like AIF to diversify if you put 10 lakh? So 10 lakh is the minimum per scheme per asset. Most of our investors put 50 lakh, 75 lakh, 1 crore, and then they diversify that across assets as well. Yes, Ramnath, listing means it does increase liquidity of the product. I think there are a few questions again. What would be the impact of SM REIT on tier 2 and tier 3 cities? See, I think since this gives an exit option to developers, like I mentioned, we could see additional growth and new developments in tier 2, 3 cities, where earlier developers did not construct because they didn't know who they'd exit to. So now that option is there. For investors who have had not great experience investing in REITs, what are the top reasons they should look at SM REITs? I think it's a great question, Kushal. I think, what's happened in the REITs, and if you look at the 4 REITs, 3 of them are office REITs, and one of them is a mall or retail REIT. And the market cap of those 4 REITs is about 80 to 90,000. But the retail investor participation is only 10,000 crore, which is minuscule, which I said earlier. The mutual fund industry is 50 lakh crore. And I think the reason has been, one, a lot of investors have not been educated, so they're not aware of the product. And REITs, it's a basket of assets. It's very confusing. How do you study each asset? Here you can pick and choose and decide the asset you like based on your preference. And the other main thing, and these REITs, the seller of the asset is the person who's managing the asset themselves. While us, we are listing completely third-party assets. So for us, we look at a wider variety of assets. We have no partiality in terms of which asset we choose, except for we're partial towards good assets with good tenants in good locations that offer good returns. IRR that we mention is net of management fee. So we mentioned a gross IRR as well as a net IRR. So Sandeep, in the presentation, you mentioned about the caveat. So the caveat was that migration, assets need to be minimum 50 crore and minimum 200 investors. But for migrating the existing investments, that exception is there. I think a few questions which are similar. What is the exit strategy? I think exit strategy is the same. In 4 to 7 years, we look to exit the full asset, but investors can exit their share on the platform at any point in time that they want. There's a question on the Bangalore Vaswani project, which is filling fast. I would recommend you reach out to your RM. Is there any anti-dilution provision for investors' equity and shares? So if we want to raise further equity, as per the regulation, there is a shareholding, there's a vote required, and as per my recollection, I'll just look at it right now. But for fresh equity, basically 66% of investors need to vote if fresh equities need to be raised into the trust. And these detailed questions are answered in this notification. So for various scenarios, there's either 75% voting, there's 66% voting, or 50% voting, depending on case by case as mandated by SEBI. So would recommend people to study this notification. So that's a good question. But yeah, I just opened it and I read it at 66%. Typical buyer profile who buy assets when hBits looks to exit. So when we look to exit the full asset, there are a lot of these smaller real estate private equity funds. There are AIFs. We are launching our own AIF. What we can do is there are a few ultra HNIs, or we can sell it to a completely new set of investors that we get onto our platform. Question from Vijay: 10 lakh investment. Any plan to reduce the investment amount? It's not up to us. It's up to SEBI. From my understanding, their intent is to reduce it eventually. I think just trust needs to be built up in the industry. Great. I think we've reached the end of the webinar. Any further questions? Do reach out to your RMs. Do drop in an email. Thank you. Thank you, everyone.